Good day. It's Johan Odendaal, Managing Director of Southern Palladium. Thank you for joining me today to talk about the Bengwenyama project. Our project, of course, is situated in South Africa, located right in the northeast corner of the Bushveld Complex, or South Africa, on the eastern limb of a Bushveld Complex. Our property is situated right there in the middle of the fairway, in the sweet spot on that eastern limb, and we're surrounded by all the global major platinum producers, the likes of Impala, Anglo Platinum, ARM, and Northern Platinum.
Right, you're right jurisdiction. Well, good to see you, Jan. We spoke, I think, last December, so it's been a while. And at that time, you had, shot out of the gate, raised a lot of money, and we're going to drill, and then deliver a PFS at some point. Can you give us maybe a little bit of history as to what you've done since last December, so we can actually have a conversation about what are you going to do going forward?
Yes, perhaps just to start on the history, we raised 19 million Australian dollars last year and listed on the ASX and the JSE in June of 2022. We then went ahead and what we wanted to achieve is two things. One is, of course, drill out the project, and also deliver a pre-feasibility study, and then submit the mining right application. So that was our initial goal then. We started our drilling back in August 2022, and I think overall the project so far delivered on the upside. Very, very interesting and exciting times for us during the past few months. We focus mainly in our phase one phase on the areas shallower than 500 meters. We had two areas, which is basically two farms, Eerste Geluk and Nooit Verwacht, which comprise about 5,200 hectares. So we focused on the shallower areas on the farm Eerste Geluk, which is sort of an eastern portion. And of course, this ore body dips from the shallow east to deeper at around about 6 degrees to the west. And we started our drilling, and August, as I said, intersected our first UG2 reef, and a few months later, we also decided, with the knowledge that we started to gain, that there was an area right on the eastern boundary that has never been drilled out, or any resource estimation done on that, and we decided to drill that out as well. And we put in initially one hole, intersected the UG2 where we expected, and put in a couple of other holes. Yes, the result was that we identified a new area, what we called then the Far East Block, and that added an additional 1.3 million ounces to our resource back then. We then continued with the drilling, and in June 2023, we did our first interim resource update, and which meant that we went through the whole geological model again, did our resource estimation, and managed to increase our resource by 34%, which is significant. What we also did was to assay for 6 E's instead of, or 7 E's instead of a normal 4 E's. And the reason for that was that the prices for the other 6 E's, or the other 3 E's, showed significant promise, and hence we did that exercise. So it meant that we managed to increase our resource from a 4E, 18 million ounces, to 25 million ounces 7E. And as I say, quite significant. The indicated resource, we also managed to convert some of the inferred resource into indicated in that eastern portion, and which was in the order of around about 5 million ounces. So indicated resource at the moment accounts for 20% of the total resource, or 22% of a UG2 resource. So we completed the initial wide space drilling, and then moved into sort of the second phase, which was then starting with the infill drilling on that eastern portion. And the reason for that was, with the indicated now in place sort of in the northeastern part of that ore body, we wanted to extend that further southeast into the farm Eerste Geluk to enable us, and the main reason for that is that we can get our proportion right in terms of indicated to inferred, to enable us to, of course, report a first updated scoping study into the market. That's the requirement. You need some proportion of your resource into indicated, and so that will then enable us to report that scoping study in the market, and also, of course, finally for the purposes of our pre-feasibility study. So that was what we did up to more or less June, July 2023, which enabled us and informed us to do that updated resource study. We're now currently in a process where we're continuing with the drilling. And that drilling is still in that eastern portion, and also into the Far East block that we want to have more borers into that area. What we also need to do, if one considers the initial inferred resource and then also our recent updated study, there was still a portion in the southwestern area of the ore body, more to the west, that we don't have any information on. So the focus now shifted towards that area as well. And currently, we have some machines now moving into that area. And that area is an area which we call the horse block area, and we need to gain more information on that. We drilled with in order of five. We drilled with five drill rigs, and we recently now got another drill rig on site, and we plan to have another one in within the next week. So that means that we're currently drilling with 7 rigs on the property, drilled in the order of 19,000 meters up to now. So within the next quarter or so, I think a very busy period for us. First, we plan to get our assays in to inform our second resource update. Of course, the drilling will continue, but we have sort of a cutoff date in terms of our assaying for our resource update. And that second resource update, we now want to start in October, November. Of course, the process is normally, the final assays going into the assay lab, about four weeks until we get feedback, and then do the geological model, do the resource estimation, and that resource estimation and geological model will then feed into the updated scoping study. So end of November, we plan to have that resource update. Scoping study, and that's the updated scoping study, will start now in October and go through until early in January, when we want to release that resource update. And that resource update, of course, will bring in, we trust, a substantial portion of that inferred into indicated. And at this moment, I think we're pretty sure we are now moving into a phase, not exploration anymore, but more into a development phase, establishing, those value metrics in terms of a project. We believe that's one outstanding thing that perhaps the market don't fully understand yet. And that is, what is this ore body really worth? And that value matrix, we believe, will come out in that scoping study in January, and also, of course, in the pre-feasibility that we will publish early in the second quarter of 2024. The other aspect that we're busy with is the mining right application. And the mining right application, we moved earlier. And the reason for that is we want to get it in. We know, as I mentioned, that we are quite comfortable now that we have a mine. And we want to get that mining right application in. So we sort of in the final stages of getting our documentation ready to submit the mining right application. So I think that is sort of in a nutshell where we are and what we plan for the next 2 quarters, Matthew.
That's a big nutshell. There's a lot to dissect there, but I'm going to focus on the building business, building value component of that conversation. Okay, so obviously been up to a lot in terms of the drilling aspect, and I think you've answered the question with regards to whether it be 4Es or 7Es in terms of the pricing, the economics. Seem to be there, but let me bring you back to something you said with regards to who you're surrounded by, in terms of the Impalas and the ARMs and the Northams and Anglo Americans, etc. If I take one of those companies, right, Impala Platinum and their Morella project, they currently have a total resource of about, same as you, about sort of 21, 22 million ounces or so, right? And 15 million ounces on the UG2 reef component. That's kind of what you have indicated where you are, but they're a 7 billion Aussie dollar company, and you are a 25 million dollar company, right? So 7 billion, 25 million. What in this new updated resource and PFS work should we be focusing on? What are you going to bring back in terms of the network, in terms of bringing numbers into the indicated, etc.? What's important and what's not so important?
I think the important aspect here of being amongst those majors, Matthew, and we sort of emphasized this before in previous presentations, is that we sit there right amongst those producers. So that enabled us in the first instance to have access to all infrastructure. There's water, there's electricity, there's skills, there's services, and that's surrounding our project. We've got major smelters, and of course, one of the products that we will produce in future is a chrome concentrate. There's chrome smelters just across the road from us. So that infrastructure is there. So you don't need to go out and build roads and have major expenses or capital expenses with regard to that. The other aspect, of course, which is very, very important in South Africa, and what that was established by all these majors, is the fact that there's a downstream beneficiation stream as well. So that is well established. We know the terms. So typically mining companies, and I'm talking mines in particular, all the mines in that area produce a flotation concentrate, and that will be with the same with us as well. So that flotation concentrate will be sold onto one of these majors. Those terms are reasonably well known and established, so we know what we're dealing with. The other thing, of course, is very, very important. Being so close to these established producers, we know that our ore body is amenable to the current mining methods, and that's out there. It's also in terms of a processing, and I'm particularly talking about metallurgical side. Processing is, we know it's very similar to what we're surrounded with. So I think all that adds to our add to this project and to make it a success. So I think the things that to look out for, our geotechnical report will be completed fairly soon. I think, again, on the positive side for us in terms of our drilling and what we've seen in our core relative to our neighbors is we've got a solid chrome seam in place, and we don't need to deal with the chrome stringers, which leads to your roof collapse, which means that there is dilution, and some of the companies or mines need to mine about 20 centimeters above your main chrome seam to prevent that. So I think that's the one thing to look out for in that geotechnical report. That we have a solid footwall, a solid hanging wall, which of course leads to less dilution, when you mine the property. The other thing, of course, is, like I mentioned, we expect our metallurgy to be very, very similar to the surrounding area. We currently have sent in metallurgical assays for assaying at SGS in South Africa, and we expect the final results to come in soon. And again, I think that will give us that final confidence that we now moved and past that threshold of being just an explorer and moving into that phase of development.
Okay, I hear what you're saying, but I'm going to just stick with this kind of valuation component. So it's a very simplistic way of looking at it, but based on what I'm being sent in terms of questions, etc., it seems to be the way people are trying to understand it. So if coming back to that kind of Marula type example in terms of, okay, I get you're going to bring more of this over into indicated. I mean, so how much will that cost, first of all, in terms of moving from inferred into indicated?
In terms of our current budget, that is included in our current plan already. So no need to raise additional funds for that.
Okay.
And then, of course, we will move into a final feasibility stage and definitive stage, and final investment decision, which will happen end of next year. Of course, we will have to go out for some money into the market, and we're currently investigating that, how we're going to proceed with that capital raise. It won't be that much, and in the order of about 10 million Aussie dollar, more or less, for that.
Okay. So can I just say, so again, I'm just trying to form a kind of business case for why I should invest in this company, right?
Yeah.
So you're in the right areas. You're surrounded by the great and the good in terms of PGEs, etc., right? So remind me again how you picked this up, because you didn't seem to cost you too much. You raised money quite easily to kind of go through the phases to the point where you can update us on a PFS, etc. So how did you pick it up, and who from?
Yes, it goes back to 2006 when we were approached by the Bengwenyama community. to help and assist, with the application of a prospecting right. This right in particular was available back then with the conversion of the old order to new order mining right. And the community approached that. So the community, the Bengwenyama, of course, is a major partner in this project as a result of that. And that process, took quite a while to get the final prospecting right in place. But again, that allowed us to pick up a prospecting right or a project with a fairly shallow ore body. I think, if you compare all the listed juniors out there, we're probably the only junior in this phase with such a shallow ore body and also a significant resource. And if you look at the resource as well, maybe to come back to your comparison with a Marula as well, and in terms of strike length, if you compare the surrounding operations producing in the order of 200 to 300,000 ounces per annum, and if you look at our strike length and our ore body, you made that conclusion that we have a very similar ore body in terms of size to Marula, and that gives you an indication in terms of what mining size we can put onto this property.
Right, but here's the thing. Like, and I'm not trying to. We need to get. So I want to understand how we finance getting you through the PFS and through to DFS, etc. Without sort of blowing the budget and diluting the heck out of your shareholders. And we won't even talk about capex because that'll be another game indeed. But if with the kind of size of resource that you are hopefully going to put into the kind of PFS for the drilling that you've done, all I'm trying to say is if we can bring more of it over into indicated, that's great. Is there any difference in terms of similarities in terms of that breakdown with regards to the types of E's that are in there in terms of the platinum, palladium, etc. Is it comparable in terms of the values? Because each of those comes at a different value. So again, is that comparable in terms of the breakdown of the 4 or 7 E's that you've got in there?
Yes, it is. It's if you look at I think again going back to particularly the UG2, and let's have a quick just discussing around that and how it compares to the surrounding areas. And again, you can break up that eastern lobe into a southern side and a central area. And if you look at the southern area, very similar in terms of composition than we have. In terms of what we call the pearl split. And the pearl split on the UG2 is in terms of platinum and palladium 1-to-1, and of course a high rhodium content. And that contributes quite significantly to your revenue. The remaining 3 E's plus your base metals plus your chrome contribute in the order of 5 to 8%, and that's what we gathered from surrounding areas and also from our internal modeling at this point. If we look at our basket price again, basket price of course came down quite significantly, which shows us that in terms of industry again and again, comparing it to industry, probably very similar level where the industry sit compared to what we calculate on our basket price, which is in the order of $1,400 per ounce. And if you compare that to where the all-in sustainable costs are about $1,000 an ounce, there's not much of a margin left anyway for the industry. So hopefully, we're sitting in a situation now where I believe we're at the point where prices should start to stabilize and start to find some support, at least from a fundamental side. But in comparison, I think we can expect in terms of revenue basket very similar to surrounding areas. Of course, in terms of our grades, we had quite a high grade in our area, and of course, with the fact that there's no significant dilution that we expect. We believe that we will come in at in terms of cost, and I'm talking about platinum equivalent cost or palladium equivalent cost, quite low on that cost curve, and that's where you want to be in future. And I think that is probably distinguishes us from some of the producers in that area.
Scale and margin, can't beat it, can you? Right. Johan, look, that's a really good update. I really liked the story last time we spoke back in December, and obviously you had a bunch of stuff to do, and I appreciate the update. And looks like some regular flow of news coming through between now and the end of kind of Q2 next year. So look, please stay in touch. Let us know how you get on with all of the above, because as you say, I think current valuation does not reflect the potential of what you've got, certainly in relation to what's going on around you. So thank you for today. Thank you.
Thank you, Matthew.